On today's hot sheet, I'm discussing the normalization over the past year in the 2025 housing market, migration patterns. The first report is out, and Realtor.com's luxury real estate report. Today is Monday, December 29, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Naples. Pleasure to be with you guys. It's a weird week. It's that in-between week. Sometimes feels like a lost week. It's a pleasure, though, to be with those of you who are checking in. Really happy to be with you guys. And we've got 3 days here of 25. We're going to recap a little bit of 25 here today. And then we got a couple days of 26. So it's like a half and half week. Next week will feel more normal. There'll be a little bit of a hangover next week. You always see that first week back. But next week will be the first week back to business in 26. So it's here. We're going to start here in 3, 4, 6 weeks, maybe getting a flavor of what the spring in 26 might be shaping up to be. So far right now, as we wrap 25, there's no indications that 26 is going to be some wild year in either direction. Okay. Sorry, doomers. Doesn't look like 26 is going to the basement. Also doesn't look like we're getting some kind of huge tailwind that's going to lift us off our feet and take care of all the problems in the housing market. Maybe a little bit more of the same. So far, early indicators, we're going to get more information, more of a feel, more data points as we move into 26 and move through that first month in particular and start to get some February data as we look forward. But right now, we're going to look backwards and just kind of say, hey, what was this year? What's the national market look like? If we were taking a snapshot at it. So I'll go into my hot sheet notes here and just kind of break this down. Okay. So, national market snapshot as we sit here today, median list price, 419,000, call it a 420. Okay. For all you 420 fans, you're just $50 under 420. It's up 0.2% year over year. So the median list price edges up in 25. And 420,000 is the number. Price per square foot, $209 a foot. That's down 1% year over year. Days on market, 84 days. This is all Altos research. Okay, down 1% year over year. Or I'm sorry, up 9.1% year over year. Days on market going up substantially, almost double digits on days on market. Market action index. We're going to break this down a little bit further. It's down 4.1% year over year, kind of weighing demand, supply and demand. Okay. Active inventory. We know we're up 16.4% year over year. We've been tracking that. Don't have an updated number with the holiday for today, but we'll get end of the year. I suspect this number to go down, the 757,000 homes, which puts us up 16.4% year over year. This was last week's number when we looked at it last Monday. I expect us to be coming into the new year under 750,000. If we look at, where did we start the year in 2020? Before everything kind of changed, we were at 760,000, so we're close. 757,000 though is where we were last week. Expect this number to go down. Months of inventory. According to Altos, 2.8, well off of NAR's number, which is over 4. So big disparity there. Price reductions, 39% of active listings. So some differences in some of the other numbers, like particularly that months of inventory number. When you look at, where NAR is right now, they're up over 4. Which would suggest a lot of numbers go 4 to 6 months for a balanced market. if you look at these numbers here, they're calling it more of a normal market, but sellers continuing to have a slight edge. That's more pronounced seller edge in certain parts of the country, and seemingly doesn't exist in other parts of the country. So you have this bifurcated market, obviously, in 2025. The inventory comeback is kind of the story of 25, if there is one. New listings, 3.19 million homes, total sales, only 4 million. So, the demand, not a story this year, continuing a trend of 3+ years of really low transaction count, low demand due to high unaffordability there. And average inventory, 770,000 homes. And we'll see if we continue. The projections right now are the gains on inventory are not going to be as substantial in 26 as they were in 25. There was a point in 25 that we got up over 33% year-over-year gap on active inventory. That was in the kind of the heart of the spring market. Now we're down to 16%, probably end the year below that. And the projections are it's going to be closer to 10 to 15% than, for the year of 26. So, we'll keep our eye on that early on and see if there's any early indicators that change that. If we look at this market action index, which is the balance between supply and demand, by combining pricing trends, inventory levels, and days on market, we can start to break down some of the, bifurcation in the market, some of the markets that are doing much better. On higher MAI indicates stronger seller leverage. Okay, so where are the markets that sellers are actually in control? Let's take a look at those here. If we look at metros, it's Greenville, North Carolina. It's Manchester, New Hampshire. It's Reading, Pennsylvania. It's Rochester, New York. It's San Jose. Okay, so price points are all over the place. Greenville, North Carolina is 339. San Jose is 1.7 million. Okay, so Rochester, New York is 234. So, price points in Manchester, New Hampshire, that's 622. They're kind of all over the map on these metros. And if you look at a state level, New England just dominates the Northeast because of the low inventory is dominating this, market index here, the market action index, where it just, because of the inventory, it shows up as more demand. Rhode Island, New Hampshire, Massachusetts, Connecticut, top 4. Michigan rounds out the top 5. So that's where, as you look at 2025, that's where the sellers had the most leverage for metros and for states. And this is a supply and demand game. Sellers don't have leverage where I'm sitting today, Southwest Florida, because there's high levels of inventory. We're going to talk about some inbound, outbound migration patterns, one of the first reports of the year. And, when you have high demand because people are moving to that location and low inventory, what do you know? Prices go up, sellers have the leverage, but not the case across the Sun Belt right now as we move into 26. Where did the money move? Okay, so this is, I don't like this titling here. This is just basically like, okay, where was the most, money? What are the biggest volume markets? Okay, Miami, LA, New York, Dallas, and Houston. Okay, Miami had $32 billion in volume. A lot of opportunity. I said, LA, 30 billion, New York, 19 billion, Dallas, Houston. I said this on at Sirhan's event. I've said it a couple times since, but Ryan asked me when we did our fireside chat in Q4 of last year, he's like, hey, if you lost everything today, what's the first thing you do? And the first thing you do if you're starting in real estate, or if you're, lost everything and restarting and willing to move, is select the right market. Okay. Like, yeah, there are markets that offer more opportunity than maybe where you grew up. Look at these numbers. And by the way, All of these markets have opportunity. I mean, I know New York and LA and Miami, and Dallas, and they're fiercely competitive. But there's plenty of opportunity to break through in all of these markets. It is not insurmountable to break through. There's just so much opportunity for someone who really wants to get after it. And that'd be the first thing I do is, not necessarily one of those 5 markets either. Okay. Like North Carolina is not on the list, but I think North Carolina, a lot of the markets there are the upside over the next 10, 15 years. It's really high. Okay. Because of jobs. Okay. You want to factor in a lot of different things if you're looking to break down a market where the opportunities are. Highest price points, by the way, for everybody is, hey, the coastal markets, people are going to move away out of the coastal markets. Insurance is going to get too high. Yeah. Well, not yet. People still love their coastal markets. Santa Barbara, San Jose, Honolulu, Napa, California. Is that coastal? California's coastal, but I've spent some time in Napa. I don't classify that necessarily as coast. LA on the list. Okay. So, it's basically where are the highest price points? California and Hawaii. Those are your top 5. Fastest markets. Okay, so fastest to sale. These were some quiet markets, some markets maybe you don't think of, but they move fast. You got lower price points. You got Midwest. Okay, Springfield, Missouri, Jefferson City, Missouri, Saginaw Township in Michigan, Decatur, Illinois again. So you have Midwest on these markets that are moving really fast. They moved, homes were on the market near 6 weeks or less. And when they're running this one, they're talking about the contract. Okay. So there's different ways to look at these numbers. They do the true measurement of like listed to close. So there's an under contract period. So homes in those markets and the price points, 318, 322, 159, 149, 299. You can't build them for those numbers. Okay. So there you go. There's just a little bit of an overcap from what Altos is looking at. And, of the market of 2025, that was obviously there'll be more end of the year data that comes out. And we finally have our first migration pattern of the year. So Atlas is one of the first. We'll see other moving companies and other migration pattern reports coming out here in Q1. Atlas now has released theirs, and we get our first look at migration patterns. This one ran from I think it was November. Let me just get this right here. Yeah, November 1st, 24 to October 31st, 25. So, this is a report that, uses that time frame. So 10 months of 25 and call it the last 2 months of 24 on this report. Again, we're going to see more reports, and this is a net number the way Atlas does it. So I'm going to show you the top 10 inbound states. This doesn't mean that this number 1 state had more people move into it than a Texas or a Florida or, whatever. Okay. These are net numbers. And so obviously bigger states, bigger population. Okay. So before I see comments on that, these are net numbers. Okay. Here are the top 10 inbound states according to Atlas: Arkansas, Idaho, North Carolina. Man, if you're going to be bullish about anywhere over the next 10, 15 years, North Carolina's a good one to be bullish about. Hawaii. Remember, net numbers. I get Hawaii's a little island. These aren't my numbers. These are Atlas. Okay. Washington, D.C. Interesting. For everybody that said D.C., they're going to have problems. Top 10 on inbound. Okay. Haven't seen many problems with the price points. I know there's softening, but geez, DC real estate market, a lot of opportunity there. Tennessee, Washington, Tennessee with all the inventory, top 10 on inbound state score and Atlas. Alabama's on the list, North Dakota, and New Hampshire. So there's your top 10 inbound states. Now, these numbers, okay, so inbound, here's the list, how to look at this. Inbound, more than 55% of total shipments moving into the state. Outbound, more than 55% of total shipments moving out of the state. Balance would be, both. So if we're kind of just looking at the U.S. and Canada here, you kind of get a feel for, okay, what's, what are the high inbound? Again, North Carolina, Tennessee, Arkansas, Alabama, not on the top 10, but Connecticut. You've got some of the Canada provinces are kind of balanced. Like you have, I think, 4 of the provinces that are high inbound. You got 3 of them that are high outbound. Ontario and Quebec are high outbound, so that's interesting there. You got a couple that are balanced. High outbound, according to Atlas, Arizona, South Carolina, Oklahoma, Louisiana, West Virginia. Some of the, balanced ones that have been primarily high inbound on a lot of these lists. This is a different list because it's a net number and it's shipments and all that. But some of the balance, Florida is 49-51. Texas is 50-50. California 54-46. Pennsylvania 52-48. New York balanced. So just interesting to take a look at this and how Altos thinks about the Atlas, rather, not Altos, Atlas thinks about this. And here are your top 10. Sorry. Let's just take a look at the states here. Okay. So this is listed in alphabetical. Remember, Alabama coming in number 1 on this list, 57-43, 57 inbound, 43 outbound. Obviously, the 46% inbound on California, 46 inbound, 54 outbound. That's going to be a bigger number than the 57% Alabama. Okay. Florida, 51% inbound, 49% outbound. Now, look at the trend shift, though. Okay, 50-50 last year. But, if you go from 16 to 23, Florida, very heavily weighed inbound. Definitely COVID years, 55, 59, 59, 58. So that's shifted. Not as much inbound shipping versus outbound, according to this report, happening in Florida. Georgia's cooled back to kind of more of their normal years. Okay. 52, that's where they were at in, 2019, they were 51. They had a pop, 54, 55, 56, 54, after COVID. Connecticut, interestingly, all these years in the basement on migration was a big story there. Last 2 years have recovered. Interestingly, 58% in 24, 53% this year. They weren't in the 50s over the last 10 years, outside of the last 2. Okay. Low inventory state. Okay. So there's not a lot of outbound movement, and it's showing more inbound. More affordable option than New York or Boston or something like that. Okay. Massachusetts has gotten really unaffordable, is down from where they were the last couple of years, down to 48%. Okay. I don't read too much into this one because it's shipments. But it is, something to kind of look at here at the beginning of the year. Here are the top 10 outbound states: Louisiana, West Virginia, Wyoming, Delaware, Nebraska, Arizona, Iowa, Oklahoma, South Dakota. and South Carolina. This is not, again, this is a net number based on shipments and not total number of, this Atlas Van Lines is not a total number of people moving in. We'll get more of these inbound, outbound migration patterns. It's the first one that we're seeing for 26. And wanted to share it with you. I'll obviously drop everything that I've got here in the show notes for you. So if you're a BAMX member, just grab the school, the show notes on school. And, listen, some of these, if I'm looking at hyper local content right now, whether I'm US or Canada, no matter where I am in North America, there is a play on hyper local content based on these reports. Okay. People are always interested that live in your community. What's happening inbound, outbound. Okay. So there is a way to turn it. You don't have to be in the top 10 on this list. Everybody's on the list somewhere. There's a percentage for everybody, and you can definitely use that data on some type of hyper local content. There is going to be interest on that every single year. I mean, I do it on our local radio show every single year. I cover every single one of these inbound, outbound, and it's one of the most sought after pieces of content that we do. And so, I'd encourage anybody that's looking for hyper local content right now. You can get, I know there's going to be some stuff for BAMX members on the content drop coming on that, but you can get a head start and grab everything in the hot sheet show notes now if you want. All right. Luxury market trends here as we wrap the year. U.S. Home market is showing a mixed price and selling speeds. Okay. So, we'll get a full end of the year picture, but as we wrap with November's data, luxury threshold 90th percentile for November is just under 1.2 million, basically 1.2 million. That's a 2% drop on monthly change year over year, 2.3% drop. High-end luxury 95th percentile. That goes up to 1.93 million, 1.2% drop on the monthly number, 2.7% year over year drop. Ultra luxury, it's the 99th percentile, comes in just under 5.5 million. That's up 0.5% on the monthly change, 2.4% drop on the year over year. $1 million listing share in November was nearly 13% of homes listed. So nearly 13% of homes listed are up over $1 million on the market. So that number continues to get bigger. Here's where the top 1% starts, 5.5 million. That's off of well over 6, nearly 7 million in 22. That was the peak. Now down to 5.5 million on where the top 1% luxury price point starts. Looking back on top 5%, 10 years ago, it was 1.3. Today, it's 1.9. It is off of the peaks, the seasonal peaks of 21, 22, and 23. 1.2 million off of 800,000, where the top 10% starts. And that was, 799, 800,000 was 10 years ago, as was the median price. National median 10 years ago was about 259. Today, it's 415,000. All these numbers have gone up, likely continue to go up if you just pay attention to the last 50, 60 years of real estate. So there's your luxury update on kind of where we sit here today. You can get more on that on the hot sheet show notes if you're interested. We'll recap the entire year. In about a month, we'll get a full year recap on luxury. We're starting this kind of, half 2025, half 2026 week with some decent news on the 10-year. I like it. Okay, we're off of the 30-day highs. We're off of the 90-day highs. We're at a 5-day low, 4.118 on the 10-year here to start this week. We have a little bit of momentum. We ended the week on the 30-year fixed in a decent place last week at 6.2%. We had a reading on Friday, the day after Christmas. So 6.2%. I think that was a December low. 6.18% on the weekly. These are near year-to-date lows. We had 6.11 out there. But if you look at just kind of where we were the prior year, 7.12 on December 26, 6.2. That's a almost full percent year over year change. Might get a little bit more relief. So, some good news on 10-year and 30-year fixed mortgage. We're only 30 days away from the next Fed decision. Overwhelmingly, CME Group and Poly Market have no change, 80.6% on the Fed watch from the CME Group, and 87% chance of no change from Poly Market. So not expected to see a move in 30 days. A lot can change in 30 days, and a lot of data points will be obviously discussed in those coming January weeks. If you're looking to get ahead of your 2026, the community in BAMX is here to support you. Number one agent community to close more deals. Tomorrow, members only live role play mastermind tomorrow, 9 a.m. right before the hot sheet, 9 a.m. Eastern. We are back. Took last week off the holiday week, and we are back to every Tuesday, 9 a.m. Eastern time, right before the hot sheet. Join us tomorrow, live role play mastermind. Myself, Tom Toole, Lisa Chinati, and BAMX members who are looking to stay sharp as we enter 2026. I'll be with you guys tomorrow there, 9 a.m. Eastern. Looking forward to that. School.com/BAMX to join us. Have a great start to your week. So nice to see so many of you guys in here staying on top of things as we close out 2025 and start 2026. I'll see you guys on the Role Play Mastermind tomorrow and then on the hot sheet. Until then, have a great Monday. Of course, toodaloo.